You know, a future where intelligent robots are working right alongside us, or even for us, well, it's coming, and it's coming a lot faster than most people think. But as these machines get smarter and more capable, a really fundamental question pops up. Who's going to own them? Who's going to control them? And how can we be sure they're actually working for everyone's benefit?
Well, the team behind the Fabric protocol has a really bold answer. They see a future that isn't locked down by some giant corporation, but one that actually works more like a shared public utility. You know, a global, open network where anybody can help build, govern, and even own a piece of our robotic future.
That's the billion-dollar question, isn't it? It's one thing to have this incredible vision, but it's a whole other thing to actually build the economic and technical foundation to make it real. Okay, let's dive into exactly how they plan to do it.
First things first, to really get what Fabric is trying to do, we have to understand the sheer scale of the opportunity and, well, the problem that it's designed to solve. And it all starts with some economics that are frankly pretty startling.
Okay, get this. Think about the job of an electrician out in California. The Fabric white paper projects that once a robot learns all the skills and local codes, you're looking at an operating cost of somewhere between just $3 to $12 per hour. Now hold that number in your head. A unionized human journeyman electrician in Los Angeles. Their base wage is $63.50 an hour. The economic push for automation is it's immense. You just can't ignore it. And this slide right here perfectly illustrates the two-sided coin of this whole revolution. I mean, the benefits are obvious, right? Super high-quality work every time, lower costs, and even better human safety. We're talking about preventing hundreds of injuries every year. But the risks? They're just as big. We're looking at the potential loss of over 73,000 jobs in California alone, and the very real danger of a winner-takes-all situation, where one single company could control huge chunks of the global economy.
So, faced with a challenge that big, how does Fabric propose to build a system that gives us all the good stuff while trying to avoid the bad? Well, this is where the protocol's blueprint comes into play.
So what is Fabric really, in plain English? It's best to think of it less like a company and more like a shared rulebook that's built on a blockchain. It's a neutral foundation that lets any intelligent machine register itself, find work, and get paid. And it all happens in a way that's totally transparent and accountable to the whole network.
At the heart of this system is something they call a transaction graph. As you can see here, it basically connects two sides. You've got the robot producers who do the work and the human users who need something done. Fabric's protocol just acts as the fair marketplace in the middle, rewarding the robots for the work they provably contribute to the network.
Now look, building a global robot economy is not something you do overnight. The team has this really clear three-phase roadmap. They're starting small, prototyping on blockchains that already exist. Then they move on to building out their own open source tools. But the ultimate goal is to launch their own dedicated blockchain, what's called a layer 1. And that part is absolutely crucial because a global machine economy is going to need incredible speed and custom features that you just can't get from the general purpose networks out there today.
All right. You can't have an economy without a currency, right? Well, for this new robot economy, the fuel for the fire is a token called ROBO. It's the economic engine designed to make this whole network go.
The total supply is capped at 10 billion tokens. That's it. As you can see from this breakdown, a really significant chunk, nearly 30%, is for the ecosystem and the community. That's to incentivize developers and everybody else to participate. Then, of course, you've got portions for early investors, the team, and a foundation reserved to fund development for the long haul.
So here's the most crucial point about Robo. It's not just for payments. Its #1 job is actually security. Here's how it works in 3 simple steps. First, to even get on the network, a robot operator has to put up some Robo as a performance bond. Second, that bond basically acts as a security deposit. And third, if that robot messes up or does something malicious, that bond can be slashed. Poof, it's taken away as a penalty. It creates a really powerful financial reason to be a good actor on the network.
So that's the ambitious vision and the clever design. But you know how it goes? A project's success is ultimately judged by the market. So let's take a hard look at the bull case versus the bear case for Fabric, pulling from some real market analysis.
Okay, on the bullish side, the drivers are pretty clear. Actual real-world adoption and partnerships, a pretty smart system where 20% of the protocol's revenue is used to buy back robo tokens, and it's starting to get attention from big institutional players like Grayscale. But, and this is a big but, the risks are just as significant. You've got massive amounts of tokens for the team and investors that are going to unlock over time.
There were allegations of a civil attack during their airdrop. That's basically where one person creates thousands of fake accounts to unfairly claim tokens. And finally, you just have the overall mood and volatility of the entire crypto market, which can pull any project up or down.
This chart paints a really clear picture of one of those key risks. Right now, only about 22% of the total ROBO supply is actually circulating in the market. Meanwhile, a massive 44% is locked up for investors and the team. This is what's known as a supply overhang, and it represents potential selling pressure down the road as all those tokens become unlocked.
And that right there brings us to the final, critical question that's probably going to define this whole project's future. The vision is to generate real revenue from real robots doing useful work. The reality is a ticking clock of new tokens entering the market. So will the economic activity from the robots grow fast enough to absorb all that new supply? That is the multi-billion-dollar question that Fabric has to answer.